Well, good afternoon, everybody. My name is Eric Levinson, Head of Business Development here at Vena Capital, and welcome to our 2021 Outlook. To my right is Michael Kokolari, our Chief Economist, and Ismail Pili, our Head of Research. And our goal today is to update you a little bit on what's happened in 2020, but more importantly, provide forward-looking insights into what's going on in the economy here in Vietnam, as well as the stock market. We're not going to talk about products. Our funds have all done extremely well, which is terrific. We're open to having calls individually with each of you. But the purpose today is really to focus on the economy and on the market. So with that, Michael, I'm going to turn it to you for the first question. Vietnam was one of the few countries in the world last year to have positive GDP growth. Is that going to continue in 2021? And what's your overall outlook for the economy?
Yeah, I think the three factors that we need to really zero in on is the personal consumption, which is about 2/3 of the GDP, the contribution to the economy by foreign tourists, which before COVID was usually around 8% of GDP. That's our estimate. There's no official number about that. And also the contribution to the economy from the manufacturing sector. Now, what happened last year was that it's a little bit difficult to disentangle what's the consumption of locals versus foreigners, so we make some estimates there. But in our estimation, the growth of consumption by people living here slowed from about 9% in 2019 to about 0% last year. So it was not below 0%, but it was about 0%, which actually, when you think about it, is not that bad compared to other countries in the region. And given that we had a 3-week lockdown where everything was shut down, but that's basically what we see happen. And then the number of tourists arriving was growing at about a 20% rate in 2019, and that collapsed to minus 80%. So these are the two biggest hits to the economy. The consumption, we think, will rebound this year, expected to come back to about the 5-year average, which is about 8-9% growth this year. Obviously, tourism is not going to rebound. And that's kind of the main input to my forecast that next year, this year, 2021, the economy will grow by about 6.5%. The other factor that I mentioned is manufacturing, and there what we saw is a slowdown in output growth from let's call it around 11% in 2019 to about 5% last year. Here again, I think it will rebound to about the 5-year average of about call it 12% in 2021. The key about manufacturing is that associated with that, so the slowdown in manufacturing last year knocked about 1 percentage point off of GDP growth, which is not so big compared to some of the other things. But in Vietnam, manufacturing typically means manufacturing of stuff that we export to the rest of the world. And of course, last year, there was an enormous demand for what people have come to be called stay-at-home goods, things like televisions, furniture, everything that you need to spend more time to work and stay at home. And so what happened in Vietnam is there was an explosion in the trade surplus from about 4% of GDP in 2019 to about 7% last year. So this was kind of supporting the economy. We do think that, I have a graph on the next slide here, where you see that we had a second wave of COVID that came up in around July, August. And what you see on this graph on this slide is that both consumption and manufacturing have been accelerating since that time. So that kind of substantiates our view that we'll kind of come back into about the 5-year average this year.
So is there anything, so the prognosis is actually kind of a 2% plus or 2% GDP growth for 2020, and you're thinking kind of anywhere the 6, 7, 8, 9% range for 2021?
6.5 for this year.
And so what gives you confidence in that forecast? Is there anything specific that says the range of outcomes is actually quite narrow and there's going to be really significant growth?
Well, for one thing, I would say the reason that I don't see it being much higher than 6.5%, there are a few very high forecasts floating around, and that's because, again, I'm not so confident that there'll be a rebound in foreign tourist arrivals this year. So any of those really high forecasts that you've seen have to be predicated on that. McKinsey doesn't think global tourism is going to fully recover for 2 years. If we look after the tragic events of 9/11, it was also about 2 years before it recovered. So that's on the minus side. On the plus side, I just mentioned that there's been this enormous demand for products everywhere in the world. And then on this slide, what you can see is that I have the manufacturing PMIs of many, many, many countries around the world. And you see there's been a massive rebound in PMIs across the world. And that reflects that people are buying products. If you saw a similar heat map for services, you wouldn't see a big rebound. So in the developed world, in the US and the UK, what people are doing is they're buying products. A lot of these products are made in places like Vietnam. So this is a positive. The other positive is that the stay-at-home work phenomenon is not over. There's surveys I have on the screen here that show this is going to continue. And also domestic consumption in Vietnam is very strong.
Yeah. So as you think about it, we're 1 year into COVID, and a little bit longer if you think about the U.S.-China trade war. A lot of that led to kind of FDI, foreign direct investment coming into Vietnam. How do you see this trend moving forward? Is FDI a 1 year, 2 year, 3 year phenomenon, or is it a much longer lasting kind of strategic shift?
Well, this year we expect pretty robust FDI inflows. Last year, in 2020, FDI inflow only fell by 2%. The amount of planned FDI only fell by about 5, 6, 7%. And so that would augur well for continued inflows this year. Going forward, I have this slide here where we talk about the government has got this new strategy they call the build the nest to track the eagles. And so what they're doing is trying to focus on things like improving the infrastructure. Infrastructure spending was up about 35% last year, improving Vietnam's ease of doing business rankings. And also you see more companies that are focusing on trying to build out proper supply chains here. So I think all this augurs well for not only high levels of FDI, but higher quality of FDI going forward.
So we've talked about that, and if we remember some comments, and people may have read various things about the infrastructure, demand for industrial land parks. So as you think about FDI in more companies, does it put stress in the system? And as you think about FDI from 2010, 2015, even a few years ago, is it the same types of companies? Is FDI of 2021 the same as FDI a few years ago?
Yeah, the composition has definitely improved. You see the proportion of high-tech exports in Vietnam keeps going up over time. And then, as I mentioned, this new build the nest to attract the eagle strategy really focuses on trying to attract higher quality FDI going forward.
Interesting. So as we think about that, it then comes to, last year, even though kind of there was the quote America first type of mentality, the trade surplus with China and with Vietnam ballooned due to the stay-at-home goods. What is your outlook on the trade balance and currency manipulation, potential tariffs? That seems to be a little bit of a cloud right now, at least from a headline perspective.
Yeah, so Vietnam was, the U.S. Treasury Department did accuse Vietnam of being a currency manipulator in December of last year. There's a quite sensitive issue in the U.S. right now. For one thing, people may know that the U.S. is running record high trade surplus deficits in general. Vietnam's trade surplus with the U.S. actually expanded from a little bit below 20% of our GDP, of Vietnam's GDP, to above 20% of GDP in 2020. These are enormous numbers when you think about it. This is not a small country, so to be running a 20% plus surplus with the U.S. definitely piques up the attention of those guys. Now I have on the slide that I have on the screen now that the criteria that they used to determine that their designation that Vietnam was a currency manipulator. It looks, from when you see the criteria on the screen, it looks like these are objective criteria, but it turns out that it's not quite as objective as it appears. And the U.S. Treasury Department's own report on this topic contains some arguments about why Vietnam really shouldn't be considered a currency manipulator and why we shouldn't really have tariffs imposed. So we're not so worried about that risk. The other thing, of course, is the whole geopolitical issue. Despite the fact that the Biden administration has come in, there were some questions. Would there be a difference under Biden compared to Trump? Certainly, there'll be many differences on a range of topics, but probably as regards the U.S. relationship with China, there's more and more consensus that not much is going to change, and so Vietnam will continue to be an important, strategic ally of the U.S., and that would, make it less likely that they'll impose tariffs. The final thing I would say on this is that the most likely outcome of all of this is because the Treasury Department is essentially saying that Vietnam kind of manipulated the value of the currency, to be artificially low, it means that the currency is going to appreciate.
Right.
This is the easiest way for policymakers
So what
to deal
you've
with
actually
it.
talked about is a strengthening Vietnam Dong as far as a year and a half ago,
Yeah.
and it has been stable.
Yeah.
You think will actually begin to appreciate as well?
This year,
that's
2021, 2 to 4% appreciation this year. Yeah.
Okay, terrific. Well, with that view of the economy, and we'll take some Q&A after Ismail's comments. So Ismail, let me turn it to you. What does that mean for the markets? That's really what the audience wants to know about.
All right, well, we're actually quite optimistic for 2021. We do think that VNI will be much higher than what it was at the end of 2020. It's certainly not going to be a straight line from bottom left to top right, but we do think that the same draws that investors come to know with Vietnam has remained. Some of these factors, of course, I'm just going to remind the audience, includes economic resiliency. The GDP, of course, is expected to accelerate over the next few years, and the factors that continue to support this momentum include the resilient domestic consumption, the favorable demographics, the emerging middle affluent class, urbanization, and of course, what Mike said, increasing FDI. Do we also have greater earnings certainty? I think for the most part, some of the countries do not have a stable environment to actually accurately predict what the numbers will be. But socially, economically, and politically, Vietnam seems to have their act in order, and that makes it easier for the numbers to come through in terms of expectations.
Yeah, so as a research analyst, and for you as the leader of the team, it's not only about your projections, but how confident are you in those projections?
Certainly, and with those numbers, we do find that the market is still cheaper. Again, we're gonna look at the PE forward numbers for 2021, and we find that Vietnam is much lower than the ASEAN average in itself. And I think the other thing that we have to note is that foreign investor positioning are still currently quite low because they had made the exits in 2020. And I think there's a renewed interest that we're starting to see, and that could potentially be another upside for the market.
Yeah, you mentioned that, and there's been press lately about maybe a shift from foreign investors more to a risk-on environment. There's been more positive press on emerging markets, Vietnam still frontier, dollar weakening, Vietnam Dong strengthening. Now, historically, that's been a kind of great for EM, has been great for Vietnam, and is that an automatic, hey, this is a great story?
Right. Well, a weakening dollar is the expectations, I think, broadly speaking. I do think that the MSCI emerging market, if you look at the index, does benefit from the depreciation, and we do expect Vietnam to benefit as well. Historically, as you said, it may not have been as strong of correlation, but I think this time around it will be.
Oh, that's interesting. So lots of reason to be excited. You highlighted domestic recovery, FDI, domestic, just everything's going well in terms of certainty and really the way that Vietnam has managed COVID. People always want to know, well, what's the bear case? So everything that's going great, what could take this off course?
I think for Vietnam, it's largely going to be exogenous factors. And this is probably going to be related to COVID issues, whether it's going to be the second virus spread, whether it's going to be the virus mutation, or even the vaccine rollout. A lot of the issues that people are concerned about, from geopolitical tensions or even leadership transitions, are probably not factors that we are too concerned about. And if there's any more endogenous factors that we would worry about, it would be a second outbreak, or not a second outbreak, another outbreak of COVID in Vietnam. But that doesn't seem likely, given the fantastic job that the government has done in controlling the virus spread throughout the year.
So your view is it's really kind of the risks, COVID is really, I don't want to say the only risk inside of Vietnam, but that's really the only thing that you could think of that would kind of derail the recovery?
There's some, but I think they're too minor. I mean, the minor points could include the new government formation, but the government has always been very steady and stable, and what we've known about Vietnam has led to that steady economic growth. It could be maybe slower global recovery, which might affect our exports, but again, that's a minor worry for us.
Yeah, interesting, and again, that's really more exogenous as well. So as you think about what makes you excited, so obviously there's a lot of great things going on from the demographics perspective. What about thematically? Obviously I know your team is bottom up, but there are certain themes you talked about at the investor conference in the fall. Are they the same themes? Are there new themes? What are you guys really looking at today?
Well, as you know, we've been running with several concurrent themes, and as the calendar turned from December 31st to January 1, it doesn't really change. It's still focused largely on domestic recovery. It's focused on infrastructure, the defensibles, as we call them. It's also looking at the beneficiary of low-rate environment, FDI, and finally consolidation.
Interesting. Now, consolidation, any specific industries?
Banks, I mean, there are too many banks still in this country. And I think the direction, if you look at the precedents elsewhere in the region, is they have to get smaller.
Yeah. Now, interesting, one of the themes you just mentioned is interest rates. What do you think? So just for the folks in the audience, interest rates here are still relatively quite high, but they've actually come down significantly over the last 12, 16 months. What does that mean for the stock market?
Well, the deposit rates have certainly come down from roughly 8% to anywhere from 5.5% to 6%. And that has actually served as an impetus for locals to start participating more in the local in the market. Record account openings, and yet only 0.3% of the population are actually trading. That suggests there's a lot of upside left for this market.
Well, thank you, Ismail. And as we think about it, that kind of gives a very good overview of the market. Put a bow on it for our audience. Think of maybe 2 or 3 things as you could kind of summarize your view for 2021.
Yeah, I guess my elevator pitch for Vietnam is the fact that the structural attraction of this market very much remains. I think Mike has highlighted the fact that the economic resiliency, the favorable demographics, everything that we talked about, the secular trends, will probably continue to drive the markets and the economy going forward. And if we look at the market specifically, we are probably trading cheaper than most of the regional peers of Vietnam at the moment.
Terrific. And Mike, how about for you? A couple of bullet points on kind of the economy.
I think we can feel quite assured that the economy will grow 6.5%, maybe a little bit higher this year, 2021. What we saw is that the acceleration of personal consumption and manufacturing activity had already every month since July, August, when we had the last mini COVID outbreak in Da Nang. It's been accelerating, and that's going to continue for the rest of until we get to the sort of middle of 2021, I think. Pretty assured. Yeah.
Awesome. So this is kind of the Q&A that we've had, and now we're going to move to live Q&A. So if you have questions, please type them up, and I will ask one that actually was emailed to me ahead of time. So someone from the U.S. who is not going to be able to listen wanted to ask about your view on inflation. So is inflation a concern in Vietnam? What was it like in 2020? What is the outlook for 2021?
Yeah, we had a little bit of a wild ride last year because in 2020, inflation started early in the year, it was over 6%, and then we ended at almost 0% by the end of the year. Now, it's natural people would look at those numbers and say, hey, was this something having to do with COVID? Because inflation in most of the world was affected by COVID. Actually, in Vietnam's case, it was entirely driven by the African swine fever epidemic. So at the peak last year, pork prices were up about 130% or so year on year. By the end of the year, they were basically flat year on year. And that's because they had gotten the epidemic under control and the pork population has been gradually increasing. Now for this year, 2020, I think for everywhere in the world, Vietnam included, the year-on-year comparisons around the months of March, April, compared to last year at this time, that's going to be kind of you'll see a blip of inflation, not just here in Vietnam, but everywhere. But by the end of the year, we'll probably get back down to around the 2.5% type level, I would expect.
Terrific. Okay, so a couple of questions coming in. Let's see here. Well, we'll just go in chronological order. Ismail, this one's for you. Can you talk about valuations? And this is earnings within Vietnam, so just valuations within Vietnam, and then I guess valuations with Vietnam and the rest of the region. So I know you've written about this, so both the growth rate as well as the relative valuation.
Sure, we've had a fantastic start to the year, and this has actually pushed the PE for the market to about 15.5 times at the moment. That is still a bargain relative to the ASEAN average ex-Singapore, which is about 17.9 times. As far as, I guess, the growth is concerned, the net profit growth rate now for Vietnam is roughly 25%. Now, that sounds quite muted relative to what we see in ASEAN, which is about 49%. But mind you, we did not fall off a cliff. Vietnam only fell about 6% last year, whereas the rest of ASEAN fell about 37%. So if you want to make a comparison, let's say with 2021 versus 2019, we are actually up 16%.
Right, and then to the point that I think you made earlier, which is there's a lot more certainty in our earnings forecast than there are for kind of the rest of the region as well.
Oh, for sure. I mean, as I said, the social, political, the economical situation, at least in Vietnam, relative to what we see elsewhere in Southeast Asia, I think it's very difficult for most analysts to pinpoint with precision as to what those numbers will be. Here in Vietnam, our analysts have a high degree of confidence that the numbers that they're forecasting, coupled with the company visits that we conduct regularly, is actually coming up with a number that we can probably trust.
Yeah, terrific. All right, next question is, what is the outlook for the banking sector? How healthy are financial services industry in Vietnam, and how badly exposed to bad debts related to COVID? So Ismail, as someone that's covered banks for over a decade in the region, 2 decades, I don't want to age you. I'm gonna give that one to you.
Right. The long-term prognosis for the banking sector is fantastic, simply because the under-penetration rate. The GDP, loan to GDP that is about 136%, but that actually masks the fact that retail to GDP is still in the single digits, let alone the mortgage to GDP, which is why a lot of the banks are adopting this Me Too strategy. It's all about retail, it's about SME. There's so much more opportunity. Now, in terms of the health of the financial services industry in Vietnam, we do apply an NPL forbearance courtesy of the central bank. Officially, our NPL figure is 2%, which is a great number. But if you take a look at the numbers that have been impacted in terms of borrowers, we would have to say if you put together the restructured loans plus perhaps the concessionary lending rate, it's probably closer to about 40% of loans have been affected that way. Now, we're not saying these things are going to blow up, not by any means of imagination, but it just says that the central bank is allowing the banks to manage these guys through the tough period. And at the moment, that's actually doing wonders in the sense that not only are provision expenses relatively controlled, but they're able to lend to the borrowers that do need them.
So the fact that you like banks today, you continue to like banks in Vietnam going forward?
Yes.
Okay. Next question is about foreign tourism not expected to rebound in 2021. How should one look at domestic tourism? And I think we could probably all make some comments on that.
Yeah, that's a great question. I mentioned in my presentation that before COVID, we estimate that foreign tourism equated to about 8% of GDP. Domestic tourism at that time was probably another 4% of GDP. So you add it together, it was around 12% of GDP. These are our estimates. There's a few different numbers floating around. What has clearly happened this year is that domestic tourism is booming. You see it in the numbers. I had shown earlier the chart of the Google mobility data, and that was specifically had to do with transportation, has really bounced back up. And you also see it anecdotally. I've taken a couple personal trips myself. The plane is full, the airport is full, the resorts are full. You got to make a reservation to get into the restaurant. I mean, it is amazing how robust the general domestic economic activity is here.
Yeah, and the comment I would just add to that is, even though the international people haven't been able to come in, it means also people in Vietnam haven't been able to go out. Yeah. And so what you see is, and I came back from Hanoi yesterday, the plane was full, and you get back to the airport, and the domestic terminal is jammed. The international terminal is empty, but the domestic terminal is jammed. Here's a common question. I'm not sure we have any more insight, but I want to ask it just to kind of make sure we kind of cover it. Is there an update on MSCI inclusion for Vietnam in the EM index? And do we expect the market to behave any differently in 2021?
Well, the earliest such announcement for the MSCI upgrade to emerging markets for Vietnam might be about first half of 22. If you're an investor, you typically try to position 6 to 12 months before that happens. And so I guess ahead of that, people might start to position with perhaps the big names. Typically, well, I won't mention names, but certain sectors and certain names that we all know are probably going to attract the lion's share of that appeal. Vietnam itself will go from roughly 17% to about 28 to 29% in that MSCI.
Well, no, that's in frontier.
Sorry, that's in frontier markets right now. Sorry, yes.
Okay, okay. Another question's coming in, and I think actually, Ismail, this one's for you again. Sorry, Michael. So looks like there is, I don't know if it's a restructuring of the exchange. It's not a merger, but what's happening with the stock exchange in Hanoi? Stock exchange to come into Ho Chi Minh, bonds moving to Hanoi. Is that relevant for investors in Vietnam? Does it make our life easier? Does it really change anything, or is this more structural, just from a trading perspective?
Right. I'm not trying to dampen that down so much, but it is much ado about nothing at the moment. What happens is the stocks get traded here in Ho Chi Minh, and then the bonds and the derivatives go to Hanoi. That pretty much is the division in terms of asset classes being traded in each center.
So it's really more about a kind of an almost internal restructuring as opposed to anything that's going to impact liquidity or anything that's going to impact the way we research companies.
Yeah, it's very different from some of the old mergers that we saw with regards to bourses. The earliest or the latest one that comes to mind is actually between the Makati and Manila Stock Exchange with the Philippines, but that was a totally different story.
Okay. So this one's just more kind of operational in nature. Here's an interesting question. Are we expecting privatizations to pick up this year? Well, Michael, I'll go with you.
Well, I think that ties into.
Do you want me to ask the question? Okay, so another question. The question below it, I probably should have asked first. This question is about how there's an election in Vietnam. What should we expect? And so then I'll tie that into the privatizations because I think they're linked.
Yeah, I think so. We have the next Communist Party Congress at the end of this month. We'll run into the beginning of next month. The four key positions will be determined: the chairman of the Communist Party, the prime minister, the president, which is somewhat of a ceremonial role, and the chair of the National Assembly. There's a lot of rumors about the particular candidates that are most likely to fill those slots, the permutations of the potential candidates. There's some personality and personal style differences between them, but basically they all have pretty much a very similar mindset in terms of political stability, in terms of the economic strategy of the country going forward. So we don't actually expect a lot of any real difference in the trajectory of the policy trajectory. Now, that having been said, there are a number of personnel decisions that need to be made at sort of a lower level, and once those slots are filled, you will see things like privatization pick up. You will see things like more infrastructure spending, probably more real estate activity, more projects getting approval. That having been said, that will take some time, by the time positions get filled and the things actually start happening. So the short answer is I think privatization is more of a story for next year than this year.
2022, not even back half of 2021?
Maybe you'll see something towards the end of this year starting to happen.
Yeah, and I think that's akin to what happens in most I suppose governments when the large infrastructure projects or large national plans, though those take a while to actually pan out. Interesting. So here's a question. What are the prospects for the real estate sector? So Nicholas, I don't know if you want to ask a follow-up because real estate is quite broad when it comes to residential, commercial, industrial, hospitality. But I'll throw it to you because I know you've written about all of it.
Yeah, so I'll just link back to the question I had just answered before that the development activity, there were a lot of projects that were on hold, pending for zoning approvals and things like that. So development activity for sure should pick up. The fact that development activity has been slow for the last 2 years has led to a situation in which the demand is really exceeding supply for residential. So we think that the demand for residential is about 200,000 units a year in Ho Chi Minh City and Hanoi combined, and the supply has been around 60,000 units a year. Actually, last year it was probably closer to 40,000. So it's not surprising that residential price is probably up around almost double digits last year. Industrial sector, you can imagine, has just been on fire. It's rents for industrial is up about 10-20% because of all the factories that are relocating, which ties back to the FDI story that we talked about earlier.
Yeah, I would probably add to that we did see weak sales numbers about 20 to 30% lower versus the pre-COVID levels this year. For 2021, we do expect a 9% recovery for 2021 with stronger sales in Ho Chi Minh City than in the north or Hanoi. And I think the supply demand dynamics differ between these two key cities. And so in that regard, as Mike is alluding to, the anti-corruption clampdown that happened on property developers in 2020 will hopefully lighten up a bit. And we'll probably expect more launches coming through. Whereas in Hanoi, there was really no clampdown. And so we don't expect necessarily a big supply coming through. But the bottom line behind all of this is we do expect good launches and good absorption of those launches this year.
Terrific. Now here's a question. Frankly, it's a little bit cliche, but I do love it. So thank you for asking it, John. You guys have both been in Asia for over 25 years as investors. A lot of people always talk about Vietnam is the next whatever. So I'll go to you, Mike, first. So you've been, again, an investor, a researcher, an economist in Asia for 25 years. 2021, Vietnam is the next what? And importantly, why do you feel this way?
Well, I'll answer your cliche question with the cliche answer. Vietnam is basically China 20 years ago. We're following a very similar economic model, which is called the East Asian Development Model. The tweak that Vietnam has made compared to what China did is we're employing a lot more FDI. So FDI is about 7-8% of GDP. In China, FDI never really got above sort of 3-4% of GDP. So we're kind of accelerating everything that China did. Obviously, there's some differences in the political, and China has more, the power is more centralized, but the basic economic approach is similar. The other thing I would add is that we're just about to go through the $3,000 per capita GDP mark. Once China went through that, over the next decade, everything went up threefold. Incomes, property prices, everything went up threefold because the domestic economy starts to feed on itself. And I think that's basically what's going to happen here.
Yeah. And I think the other thing is that the pace of industrialization, the pace of the emerging middle class is actually just getting faster because of technology. There's certain things enabling that the economy is more global now than when China was developing 20 years ago. Yeah. Ismail, same question to you.
Well, certainly comparing one country to another is based on their market maturity stage. And along that line, people will tend to compare Vietnam perhaps with the Philippines and Indonesia. There's a lot of similarities in the sense that there's a strong structural and secular trend that course through those markets, especially in the early 90s, which of course ran for over a decade plus. And that includes a strong domestic consumption story, favorable demographics, you have an emerging middle affluent class, you have urbanization and increasing FDI. I think those are probably the key points that are probably being shared by Vietnam with some of these emerging markets. But I probably have to agree with Mike that in the longer term and longer scheme of things, the China one seems to be a more appropriate comparison point.
Well, terrific. Well, to everybody that dialed in today, thank you very much for dialing in. Thank you for your questions. If you're shareholders of our solutions, thank you for your continued support. We look forward to doing this each quarter. If you have questions that we didn't get to, or if you have product-specific questions, please email us. We'll definitely get back to you, or we'll set up a call. But again, thank you for your continued support. Happy New Year. Be safe, and we'll speak to you soon. Thank you.